Hi there. If your business uses overseas subcontractors for research and development, your R&D tax claim could be rejected. PTA explains HMRC's location of activity test and how it works.
Hello there. If your UK business relies on overseas talent for its research and development, then you're absolutely going to want to pay close attention. We're going to walk through the huge changes to R&D tax relief and, more importantly, what they mean for your business's bottom line. All the guidance today comes from the expert tax advisors at Pro Tax Accountant. So let's just get straight to it with a pretty serious question. Could that overseas team you rely on actually cost you your entire R&D tax claim? Frankly, it's a question that far too many UK entrepreneurs just aren't asking. Since the rules got a massive overhaul, using an overseas team can now put your whole claim at risk if you don't get this exactly right. And just so you know, the team at Pro Tax Accountant is on the front lines of all these changes. They are helping businesses navigate this new, tricky terrain every single day. So the insights we're sharing today, they come directly from that real-world, hands-on experience.
Okay, let's get into it. Here's what we're going to cover. We'll kick off with the sheer scale of this issue. Then we'll unpack the new UK First Rule. After that, we'll look at what this really means for your overseas teams and walk through the incredibly narrow exceptions. And, crucially, we'll finish up with how to prove your claim and where you can find that expert guidance.
Right, first things first. Let's set the stage and get a proper handle on the problem we're talking about. This isn't just some minor tweak in the tax code. We're talking about a fundamental shift that could have massive implications for innovators all across the UK.
To give you a sense of the scale, just look at this number, £21.6 billion. Let that sink in. That's the estimated value of overseas work that used to be part of UK R&D claims. Now, under the new rules, a huge chunk of that is, by default, no longer eligible for tax relief. It's a colossal financial shock to the system. And you know, this isn't just an issue for the big players. Picture this, a brilliant tech startup in Birmingham, working with a super skilled team of developers over in Poland. In the past, that was just a smart business move. Today, without a rock-solid justification, those costs are disallowed, and the funding that startup relies on could literally just disappear.
So what's actually driving this change? Well, that brings us to the new UK First Rule. Understanding the government's thinking here is absolutely key if you want to navigate this new world of R&D tax relief and protect your claim.
The why behind it all is actually pretty straightforward. The government wants to make sure that money from the UK taxpayer, which is what R&D relief is, gets ploughed right back into the UK. The goal is to boost our own economy, build up the UK's skills base, and support the local workforce. It's a strategic move to keep the benefits of innovation right here at home.
And the difference here is, well, it's night and day. It's a huge shift. Before, it was simple. If you were a UK company paying for R&D, it didn't really matter where the work was done. Now, the default position is that the R&D activity must be physically performed right here in the UK to qualify. The door to claiming for overseas costs isn't completely slammed shut, but it has been narrowed to a tiny, very specific opening. So, how does this UK First idea affect your business on a practical level? Well, the rules specifically target the two most common ways businesses use overseas talent, either subcontracting R&D to another company, or hiring what are known as externally provided workers, or EPWs.
This is a point that catches a lot of people out, so let's make this really simple. Take a look at this. Whether you're paying a firm in another country to do your R&D, or you're paying an agency for developers based abroad, the result is now the same. The cost is ineligible, unless you can pass that incredibly strict exception test.
And that leads to a massive pro tip. This is something you should be doing right now. Your contracts with any subcontractor or EPW provider must be crystal clear about where the work will physically be done. Any ambiguity here is your worst enemy. If HMRC ever comes knocking, a contract that clearly states the work is happening in the UK is your first and most important line of defense.
Now stay with me. This next part is absolutely crucial. This is the only way you can claim for R&D activity that's performed outside the UK. It's a very strict three-part test, and you have to satisfy every single part of it. There are no half measures here.
The official jargon for this is Qualifying Overseas Expenditure, or QOE. But don't worry about the acronym. Just think of it not as a loophole, but as a special, hard-to-get status that your overseas costs can earn, but only if they pass a really tough three-stage approval process.
So here it is, the crucial three-part test. First, you have to prove that the conditions needed for your R&D simply do not exist here in the UK. Second, you have to show that those exact conditions do exist in the overseas location you've chosen.
And third, and this is the biggest hurdle, you have to prove it would be wholly unreasonable to recreate those conditions in the UK. Not just expensive, not just inconvenient, but wholly unreasonable. And this brilliantly illustrates what HMRC actually means by that. This is a direct example from their own guidance. If your R&D involves putting sensors on an active volcano, well, that's a geographical condition the UK doesn't have, and it's obviously unreasonable to try and build one. That's the level of justification we're talking about. So think geography, environment, or very specific legal factors. Just to be really clear, it being cheaper or easier to find staff abroad will not cut it.
Okay, so that leads us to the most practical part of all this. If you genuinely believe your overseas costs meet that incredibly high bar, how on earth do you prove it? Because let's be clear, under these new rules, the burden of proof is now firmly on you, the claimant.
You'll definitely want to hear this part. Think of this slide as your essential checklist. To have any chance of defending a claim for overseas work, you need a robust evidence file. We're talking about things like board minutes detailing not just the decision, but the reasons for it, and technical reports that specify those unique overseas conditions. You have to build your case meticulously, right from day one.
And here's another key piece of advice, and honestly, this one's a biggie. When your board decides to use an overseas team, the reason why it absolutely had to be done there must be documented in the minutes at that time. Not just what you're doing, but why it must be done there. That record, made at the time of the decision, is absolute gold dust if HMRC ever investigates.
So let's bring all of this together now. It's pretty clear that the landscape for R&D tax relief has been completely redrawn, and navigating it successfully is going to take a whole new level of diligence and expert knowledge.
The key takeaway is this: the rules are tougher, the bar for compliance is way higher, and the financial penalty for getting it wrong, losing your entire claim, is severe. In this new environment, getting professional, expert guidance is no longer a nice-to-have. It's an absolutely essential part of your R&D strategy.
And of course, it's really important to state that all the information we've covered here is for general guidance. It's designed to make you aware of the critical issues, but it's no substitute for professional advice that's tailored to your specific business. You really shouldn't rely on it alone for your financial decisions.
To make sure you navigate these complex changes correctly and secure that vital R&D funding your innovation deserves, we really do encourage you to speak with an expert. You can contact the team at ProTax Accountant directly. The best way is via WhatsApp or phone on 07985 689912, or you can drop them an email at info@protaxaccountant.co.uk.
The rules around innovation and tax are always on the move. And in a world where R&D itself knows no borders, UK tax law is now drawing a very firm line in the sand. Staying ahead of these changes is what will separate the businesses that thrive from those that get left behind. To stay informed, please do subscribe to the Pro Tax Accountant YouTube channel. Thank you so much for your time.